Good morning. How are you? I got to reload the coffee, the energy drinks, and the liquid kale. But let's get going very soon, huh? Weekly claims just came out. All right, let's get going soon. Give me a couple moments. Let's go, go, go. Nine minutes. Yeah, boy. Never matter the fact that corrupt like a senator. Hey, we're almost there. 8:39. I'm just sucking down some kale juice before we get going. Yo, 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 yo. Oh yeah, 3 minutes, 3 minutes, 3 minutes. Back again is the incredible. Once again, back is the incredible Rhyme Animal. Once again, back is the incredible Rhyme Animal. Never mad at the fact he's corrupt like a senator. Hey, one more minute. This is it. I can feel it building up. Oh, yeah. Less than a minute, ladies and germs. Yeah, boy. All right, good morning. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Yeah, I guess I should turn the mic on, huh? Yeah. All right, good morning. Good to see you. Looks like you lost some weight. Got a new haircut. It looks good on you. Hey, anyone attend the second quarter update to our annual outlook? Did anyone attend that yesterday? Oh my goodness, it was so much fun. I think we got it down in we got it done in like an hour and 15 minutes. Wasn't too bad. I skipped the whole log into the Fed and analyze, money supply and all that kind of stuff because we already knew all that from the previous one. So that was great. Get it? Was great. And then yesterday was the Fed meeting, huh? Good old Fed. They're very, very actively going to do nothing. And that's been the strategy of most central banks around the world for a very long time. Sounds like a pretty good gig. Yeah, sounds like a pretty good gig, huh? What did you do? Well, we had lots of meetings and we talked a lot about maybe doing something someday, but we all decided doing nothing was the best course of action, right? I will not condone a course of action that will lead us to an interest rate cut. Yeah. Yeah, that was a Star Wars reference. I don't know if you caught that. All right. So some asset, some unknown asset, looks like wants to go from 36,000 and a half up to 38,000, maybe 39,000. Wonder what that could be. Mm-hmm. Let's get an update on the headline. U.S. dollar, Canadian dollar climbs as traders await Bank of Canada risk report, Trump trade deal announcement.
U.S. labor productivity pulls back more than expected in Q1.
U.S. productivity, secret sauce of economy, falls for first time in almost 3 years. The U.S.-UK trade pact will leave the 10% tariff in place, report on. U.S. initial jobless claims dropped to 228K last week.
Bravo.
Euro pound slumps near 0.8470 as pound sterling strengthens after Bank of England's policy decision. Mexican peso steady after inflation tops forecasts. Focus shifts to Banxico.
U.S. weekly jobless claims dip to 228,000.
Jobless claims fall in latest week. No sign of wider layoffs.
United States initial jobless claims below expectations. 230K in May, sound. Actual, 228K.
Yeah, so we went from 241 to 228. Hey, that was pretty good. Looks like the only people losing their jobs are government workers. All right, all right. Mm-hmm. So jobless claims back to normal. Here. Bank of England, yeah, they cut interest rates. Good, good, good. All of that's been expected. Very nice. Bank of England. Okay. And they were expected to cut, or I mean, I guess in this case, we expected them to cut, and they cut. But I think a lot of people also expected them to cut. But hey, we don't always agree. Okay? And the interesting thing here is there's no pound trade. Yeah. Wild, huh? Wild. Wild stuff. Yeah. Any scalps going on? Let's take a look. Most of these are going to be trades back to support or resistance, like right there. A little scalp up to resistance. What's going to happen after that? Well, I don't know. So you would take your profit, right? Pound, okay, was under threat on a breakout, but then reversed on the fundamental news. Now remember, none of any of the patterns, or whether it's scalping or emerging, which is over here, um, the technical charts up here are emerging. They haven't formed yet. When they do form, they get pushed over to here, and that's why we know the probability. And so this is kind of interesting. Right as the news came out, pop. Okay, and of course, this was all pre-news. It doesn't understand fundamentals. It doesn't predict the future. It just recognizes patterns. And so, anyways, a rising wedge, is that bullish or bearish? Well, it's bullish. So then you're like, but Wayne, it says down. No, 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 no. You're like, Wayne, that doesn't mean down? No, it does not. It means if the bullish trend breaks, then you want to be a bear. But what happened? The bullish trend held. And that would have been on the back of the fundamental news, you see? It's just that I have so many meetings to my phone is going crazy to sending me reminders. All right, cool. Now here's a little scalp down to support. Kiwi Swissy down. And if you're lucky, you get to support. Is it going to break through? We don't know. That's not what this is about. We don't know. No idea. But down to here. Now, I prefer longer term trades, right? So I would prefer something like that. That's not what this is saying. It's saying there's a high probability it makes it back to support. Not many pips, but it's a scalp, bro. 81% chance you can pick up some pennies in front of the moving freight train. Aussie, Swiss franc, very similar, huh? High probability of down to support. What about after that? Don't know. Okay, don't know. What's your bias fundamentally? What's your outlook technically? Now, you can see that's likely what's going on here. And so there's a high probability it goes here. I think there's also a high probability it goes here. But the scalping radar doesn't know that. So, I would thread these pearls like that. That's how I would do it if I were. But quite high probability we get to at least support. But maybe we break it. Do you like this tool? It's nice, isn't it? It's pretty. Okay. Yeah. USD kitty cat back to resistance. Maybe. Nah, don't really want to do that. I mean, do I want to buy dollar? Well, dollar was strong today, or has been strong today. So maybe. So it really comes down to our analysis yesterday. How many people here attended the FOMC meeting live here on the Forex.Today YouTube channel? Anybody? Okay. And our analysis said a shift this way in rates, future rate expectation. And if so, dollar would be strong. Well, dollar's strong. Is that going to last for a while? Well, we might just shift to say not June, but July. And that's what we talked about before the news even came out. Right? And in fact, I talked about it in the second quarter update. I said we have to watch the market go from it's going to be June to oops, it's not going to be June, it's going to be July. And then what? Oops, it's not July, it's going to be September. Uh-huh. Well, that's what it's saying now. Yeah. Depends on what the economy does. Depends on if the Fed cuts, when the Fed cuts, why the Fed cuts. But in general, I'm a perma bear. Will the United States dollar be the only reserve currency in the world 50 years from now? No. Will it be a reserve currency? Yes. I just think there'll be more than one. Probably another fiat currency and probably a digital currency. So plausibly 3 reserve currencies. So it'll be the US dollar, the Polish zloty, and Bitcoin. I might be wrong on the Polish zloty. Okay, here's a little breakout. Why is it a scalp? Well, okay, we have broken out, so it's the next leg. The first scalp probably was take it from support up to resistance. That makes sense, right? Of course it makes sense. Then what? Now we've breached it. So where are we going to go? How about resistance or a breakout? Makes sense. Yeah, that's why they're scalps. Of course it makes sense. If you break out, you go to the next level. And then what? Okay. Or even just straight through and then pull back. Probably that's the one. Huh? Staring at the sun. Not just deaf and dumb. Staring at the sun. So anyways, huh? Yeah, anywho. What a cool little tool, huh? Yeah, they're just little skippity scalps. It's saying that it looks like this falling wedge is broken. Oh, what do you want to do? Try a dip? Mm-mm-mm. Yeah, cool, right? I hope you use these tools. You're like, Wayne, I only scalp when there's a 75% chance or greater. Oh, okay. You mean these ones? Yeah. Let's look at our implied vol. Nice move on the pound, huh? Look at the daily high. Interesting. So, how do you use this information? Well, if you are now a bear on euro pound based on the Bank of England news, I think we can agree that the implied daily highs seem to work pretty good. Okay. Yep. So, what's the target? 24 hours from now, we'll be here. So, how do you do the price action? Up, 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 down, down, up, 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 down, down. What do you think? Oh, thank you, Flip. I appreciate it. Yeah. It's from drinking all the Polish potato vodka. Yeah, that potato vodka. Mm. So, anyways, that makes sense, doesn't it? If we're going to go this way, that's probably how we would do it. Okay. We're about to lose volume and volatility, however. Okay. So maybe one more fizzle and then that's that. Yeah. Cool. But you're in it a little longer. Okay. Mexico, higher inflation than expected. Okay. 2 hours ago was the best time of day to be trading this. Okay. 2 hours ago, we are at the implied high. You know, I'm a bear because I cannot be a bull. So, okay. This is, if you're a bear, the implied high of the period, and this is the period we're talking about. Okay. This is the period we're talking about. Okay. That's the time of day you want to trade Mexican peso. There's also one around the London close. Then there's another little volume increase around the US close. And there's another little volume here. Kind of interesting, right? Asia open. Look at that. It's pretty unusual. So, right, front running the London boys, then London opens, it fizzles out, and then around London lunch, it picks up again. It's good to know. Now, I only know that that's specifically on Thursday. So, okay, we're about here is the best time of day. Okay, so we're talking about, let's say, 1, 2, 3, 4 hours ago. 1, 2, 3, 4 hours ago, we were on the 4 hour. All you have to do is be a bear. Cool. But also, Mexico has higher, their inflation numbers came out higher than expected. We can double check that in case I'm wrong.
US dollar index choppy with 10% tariff to stick despite trade deal for UK. Iceland trade deficit widens in April. Indian rupee falls to near 4-week low amid India-Pakistan tensions.
Futures pointing to initial strength on Wall Street. US dollar, Canadian dollar climbs as traders await Bank of Canada risk report, Trump trade deal announcement.
Ukraine's parliament ratifies minerals deal with US. Hopes for more arms.
Britain set to strike first deal to cut Trump tariffs.
U.S. labor productivity pulls back more than expected in Q1.
U.S. productivity, secret sauce of economy, falls for first time in almost 3 years. The U.S.-UK trade pact will leave the 10% tariff in place, report on. All right. And all right, so let's Mexican inflation 3.93. So they've had an uptick in inflation from about 3.5 to basically 4. So either not cut interest rates or raise it. That would be bullish for the Mexican peso. And now we just happened out of all the newest things 39 minutes ago, you got the green light to sell. I guess that's a red light. But anyways, so now you would be looking, okay, for down and up, but I've already explained that. What we've also known from the implied volatility tool is is the best time of day to be a bear or to trade. And if you're a bear, that means sell because you would have been at various forms of resistance. And now it's already dropped. Okay, so now what's the next play? If it makes a lower low than these areas, oops, I'm trying to get this. Okay, there's this level of support and list. So if we break through that, then the next move is that. Cool, which makes sense, doesn't it? Of course it makes sense. Okay, isn't that nice? Yeah, this page is such a mess, but I cleaned it up. But it is what it is. All right. So here's the recording. Just want to let you know that yesterday's update is done. It's up there. Throughout 2018, look at that. Okay, cool. So thank you for attending. And here's the original one back in January that we did. So spoiler alert, has reduced. Okay. I want you to see this. Okay. We had, for the situation of tariffs, no cuts. This is January. Liberation Day was April. This is January. If we have tariffs and no Fed cuts, the S&P 500, which was still at all-time highs, we have dropping to the annual S1 pivot point and then heading back towards the annual central pivot point. So what we said in January when we were at all-time highs. So then you go to the S&P 500. So the question is, it did drop. Okay, we did get tariffs. We didn't get cuts. We didn't get tax cuts, right? We didn't get the Fed to cut. So our scenario was, okay, it was going to drop. Remember, we were here. It was going to drop, and then it was going to rally back. Where was it going to drop? S1. And the rally back, central pivot point. Okay, and we did that here. And only under the scenario of Trump announced tariffs and the Fed does not cut. Okay? You guys following along? So it did drop, and we were put in the scenario of tariffs and no cuts. So we were right in the direction that it did drop. We were right in the correction, because it did correct. But did it drop to S1, and did it rally back to the central pivot point? Well, let's take a look. Let's change the template and check it out. You ready? This is the S1. This is the central pivot point. And this is where we were when I did the analysis. So our assumption was, if Trump does tariffs and the Fed does not cut interest rates, we are going to do this. Very specific prices. Now, is that truthful, or am I going backwards in time, rebuilding history so that I look good on YouTube? Or is it 100% fact? This is where you type. If it's BS, I want you to call me out. Oh. Denise says exactly. Anybody else? Thank you, Denise. Quiet group today. Hello? That's a little surprising. So does anyone remember it differently? Call it out. If it's BS, call it out. It's recorded, of course. Yeah. So I guess what I'll do then, yeah, if some people are just not sure or don't quite remember it that way, I guess what I'll do is I'll just release it onto YouTube. Done. All right. I'll put the video on YouTube. Stand by my analysis. Okay, this is our weekly gold play. Remember the analysis. Okay, we did that last Thursday. Yeah, it's a quiet group, huh? Yeah. Well, I'll just release it. There you go. Done. If it's BS, well, it was recorded. I'll put that on my to-do list. My WTI, this is starting to work out really nice. Okay, yesterday we analyzed it this way. I'm like, it sets up the potential for a head and shoulders. It's not quite that, but could somebody do one of these things? Yeah. Remember, this is the double bottom. So now we have an inverse head and shoulders. On a right head, on a right, whatever you want to call it, bottom, right end of the bottom. Okay. That's a big deal, isn't it? And you go to, let's say, only WTI. The long term, I would agree, Alexio, the long term. Okay. Technically, right now, TRADARS sees short term up, and a descending triangle on a 4 hour. So there's our double bottom. So it's saying, yeah, okay, you could be long today, but you got to be you're vulnerable to that. On the daily, you're vulnerable to the new lower low. We don't know if it's going to happen, but this is plausible when you have a double bottom. And I look at this as a double bottom. I don't look at it as a descending triangle. I understand why it's falling, and I do expect it to fall. I did say it would drop from 80 to 40. I just didn't think it would drop from 80 to 40 this time of year. Later in the year, yes. So could we have, because remember, this is an emerging pattern. It's not an actual pattern. So what I'm doing is I'm reading through it and I'm going like, I think more like this for a while. right? And then down. I'm following the money. Okay? It's fundamentals of not just global macroeconomics, but it's fundamentals of the crude oil industry. So I'm like, I get the double bottom. It was also our predicted annual low. We predicted this in January, that it would drop to that price and then reverse. Well, I still think it'll reverse. And then what? And then I'm going to sell it. Yeah. All right. I got to go early today. I'm sorry. Have a wonderful New York session. The markets are going to open in about 90 seconds. Peace on earth. May the pips be with you. May your profits be above average. Have the greatest day ever. See you at 4.